Alright traders, I'm back again with another video, and this time we're just going to be doing our update for the week. Look at what's been going on, what's happened, and what might happen. So pretty much our outlook. We're going to be doing top-down analysis from the top to the bottom. Alright, so here we go. We're starting off here with the Euro Yen. This is my favorite pair for next week. There's a very nice setup coming on here. So we're on the monthly time frame here. So look at here. There's the top of the Kumo. So I have that marked with the dashed line, the light blue line, and then the darker blue line is going to be my Kijinsen. So these are monthly levels. So I'll see that on the lower time frame. Now the thing that I like is that I put the Fibonacci retracement levels in, and the market usually moves 50% to the Kijinsen. A lot of times it'll retrace back to the Kijinsen, and sometime to the 38.2. All right, so but what I look for is for that back to the Kijinsen, because when the market gets farther away from the Kijinsen, it wants to get back in equilibrium. When it's far away from the Kijinsen, it's not in equilibrium, so it wants to get back to equilibrium, pulls back to the Kijinsen. All right, sometime it will pull close, and will be a 38.2. So be aware of this level, which is going to be at the 1831, and that's going to be just at the bottom of this Kumo, at this Kumo cloud. So that's going to be a strong level. Let's put a, actually we can see that if we keep the fibs on there. So if we drop, we know that this might be our first level to look at. All right, so that's going to be one that we're going to look at, and then finally this will be the level that we're looking to. All right, so the monthly time frame, remember that trends start from the bottom up. We do our analysis from the top down. So when a trend starts, it's going to start on the lower time frame and work its way up to the bigger time frame. So let's go to the daily time frame. And here's what's making me love this pair on the daily time frame. You got this Kumo breakout. This just happened today. Now see, I was going to put an order in already and have it for like right here, and then put my stop loss above this candle, put it up at the Tenkan-sen, and then see, here's where our levels are. All right, so I'm looking for this Kumo breakout, and then our first level is going to be this 38.2, which is right here. So you could even just put a line right here, because you see the fractal levels right there, and know that that might be your first level target. And then finally, here's our level where the Kijinsen is on the monthly time frame. All right, so let's go back to the monthly. I want to show you one thing where we may get faked out here. Now, is this market done moving up right now? Is it retracing? So is it going to be a 50%? Because see, we could just be a little short pullback and then a move until we get to this level and then retrace. All right, but so what the market is showing me so far, and the monthly time frame is large to wait to see what's going on, so you'd have to go by the lower time frame, but we're getting our support and resistance levels here, and we can see that, yeah, the market has started a pullback. So we're going to take that as that's what's happening. All right, so if we get pulled out, the market will move back up and move up to this level probably, because this is where your resistance is with the support with the Kumo. All right, daily time frame again. Now I love this breakout here. Now what I'm going to do is probably put a, let's see how far are we from the on this time frame from the Kijinsen. Yeah, we're quite far. So I'd like to see this pull back some more and then drop. So if it pulls back, maybe if this closed, it closed here, and now on the next candle, if it pulls back up and then drops, because on the daily time frame, we're quite far away from the Kijinsen to be making a trade, because all that's going to happen is it's going to pull us back. See, we're almost 400 pips away on the daily time frame. That's a lot. Usually I look at like 3 and I'm starting to worry. All right, so 4, I don't think we get much more movement. Maybe we get down to here and then we go back up. All right, so we want to make sure that our trade is good. We're too far from the Kijinsen. This is the breakout. Now see, even if I'm wrong, traders, and it breaks out, never worry, we missed that trade. What happens is the market will retrace back to a level. We'll get the retrace and then we'll go. The market doesn't want to be too far from the Kijinsen, so it's going to eventually pull back to that level. And 400 pips is far on the daily time frame, so we may be looking for that. But see, look at this pair here. We're bearish on the um, cloud breakout, so price is bearish. You got your Kumo twist bearish, your futures bearish. You got a TK crossover, which is bearish. Chiku span is underneath the price, and it's bearish, and it's inside the Kumo. A nice break outside of the Kumo and close outside of the Kumo will give us some really assurance that this trade is strong. But everything is showing us that this is strength. Now, the only thing that we're worried about is how far away from the Kijinsen we are. So we'd like to see a pullback and pull back to a level. So what we'll do is, if this is going to be the end or find the end, what we'll do then is put our Fibonacci retracement levels in. Alright, so most of the time it's going to be 50%, which would be this level. Alright, so if it's not that level, maybe 38.2, which would be right at the Tenkan-sen almost. So let's see that if we're about right. Alright, so we're pretty much right with this. If you look at that, you got the 50% retracement would be right here, right with the Kijinsen where it's lined up. So if the market off of this move here, the market try to retrace, and then you got this 38.2, pretty much close with the Tenkan-sen. Now if we take it off of this move here, then the 50 will be right here. So we'll look to get back to this candle. If price can pull back near the top of this candle, then we'll start looking to see where we could get into the trade. Hopefully it'll pull back and then break out. We'll get closer to the Tenkan-sen. Closer to the Kijinsen. Okay, we take those off. So that's the daily time frame. We want to see that pull back a little bit before we jump into that trade. So on the 4-hour time frame, let's put a line here. This is where we're looking. First of all, this is going to be the bottom of that cloud on the daily time frame. We want to see this. Alright, so we know that's the bottom of the cloud right there on the daily time frame. Let's move it right to where it is, right there. That's where price broke out. So when we go to the 4-hour time frame, we could see that. Man, what's up with this? Alright, so price broke out there. We can see that on the 4-hour time frame. And then here's where price is. Let's go to the 4-hour time frame. Let's put one more line just to see where we are. This is the lowest level right here on the daily time frame, where the price made its low right there. Let's see where that is based off of the 4-hour time frame. Alright, so here's the cloud, bottom of the cloud on the daily time frame right there. So there's the cloud, bottom of the cloud. We're below that, and then here's the lowest low. Okay, so we need to see a retracement. We need to see that retracement. How far are we away from Kijinsen on this time frame with the 4-hour? 262. That we're pretty far away. So we definitely want to see that pullback. So maybe even if the market moves, don't get scared. Let it move, and then maybe it'll retrace and come back up above this level. So what we're going to look at, put your cloud line in, price goes back, maybe it'll retrace back up into here, and then when it breaks again, you could get it. But now definitely if we pull all the way back to the Kijinsen on the 4-hour time frame, if we pull back to that Kijinsen, we want to get into that trade. Now this is a level that I was looking at to say definitely no lower than there. That's where we want to take the lowest part of the trade. We don't want to be any farther away from here, because see, this is going to be, to me, a nice trade if it develops properly. We could hit this level or this level here. Now if we're wrong, it'll go all the way back up. Let's go back to the daily. Alright, so you see that right there. Everything's bearish. Let's put our daily. We didn't put that in, so we didn't see that on the 4-hour time frame. So even on the daily, that's the daily Kijinsen. Let's see where that is on the 4-hour time frame. So we're saying we want to pull back to this level, but if it does, here's the daily Kijinsen right here. So if we're wrong with this trade, then what'll happen, we'll come up to this daily Kijinsen, then we can play the other side. Alright, so before we get into any trade, we want to break one of these levels. Basically, we would like to see this trade come up to here and then bounce, so we can play a Kijin bounce on a 4-hour time frame, which will be a breakout when it comes down here on the daily time frame. And then also, if price comes up and continues to go up, then here's another level. If we bounce off of this level, or we break this level, so this is going to be your daily time frame Kijinsen, and this is your 4-hour time frame Kijinsen. So we'll see what happens if price gets there and then bounces and comes back down. Now if it breaks that level, then we want to wait and see what happens when it gets here, because this is on the bigger time frame, the daily time frame, looking at that. So maybe price comes up, bounces on that, so that'll be a daily time frame Kijinsen bounce, and then it'll go lower. But if that happens, we'll be above the cloud on the 4-hour time frame, which would make us not want to take the trade yet, and everything will be out of whack for us by then. So we'd wait to see if it comes up to this level, bounces. If it doesn't bounce and breaks and violates, then we're going long, right? So that's basically where you want to, this is going to be a main level for you if price breaks this 4-hour Kijinsen. And then if price comes up and retraces and doesn't break that 4-hour Kijinsen, then starts to go back down. Look at this, is the bottom of that daily cloud. We definitely want to be in that trade, and we want to ride this trade all the way down. 38.2, and then here. Alright, so that's the Euro Yen 4-hour time frame. Let's go to Euro US dollar, everybody's favorite pair, my least favorite. There's your levels. You can see the levels on the monthly time frame. This is a big flat top up here. If price eventually gets to that level, watch out, because this is going to be a strong support, strong resistance level. Right now, you got facing resistance at this monthly Kijinsen right here. And let's see where we are with the daily. Daily, we had a breakout. So right here, you broke this fractal level right here, and if you didn't get in a trade, see, once that level was broken, you should have been in the trade. Here's your Kumo breakout, and it's too far from me. I don't get in on a long candle like that, but you had that retrace, and then price broke here, so now you could definitely get in a trade there. And there's where your stop loss is, right where this other fractal level is. So now price took off, but let's see where we're headed. Alright, so we're not far from this level here. Alright, so basically, if price retraces and breaks this, if this makes a fractal level here, price retraces and breaks that level, you still can run this to here. And then this is where you want to see what's going to happen. Once you get to this level, you want to see what price is going to do. So being on the 4-hour time frame, this is the daily time frame. Let's go to the 4-hour time frame. If we're saying that we're still looking for the long trade, all right, the thing is, we never crossed this side of the Kijinsen yet, but you can see the momentum died out because this is flatlined, and so is your Tengen-sen. They're riding next to each other horizontally, so that means basically we got a no momentum in this market right now. And then you can see how thick the cloud is. That shows you a lot of volatility. But see, all of our signs are still bullish. We have everything bullish now, so we'll wait to see if we can break this level. And if we can break this fractal level, you know, you had to bounce here off of the Kijinsen. Now price is attempting to break this fractal level. If we break that level, we got to ride it to the next level, and you'll go right there. That'll be your next level. And then the next level will be, we can't see it on here, there's that next level. So price gets to here, we want to see what's going to happen here. But if you get into the trade, you get the trade here. You could get your trade here on the break of the fractal level and ride that to here. All right, and then you see what's going to happen. If the market drops, then you wait to see if it's going to break this level again. You want to wait for it to break that level, and then we'll ride it to there. So I'm looking at the euro dollar pretty much bullish, and I'm looking at some pretty nice upside for it. Now the thing is, if we fall below this Kijinsen here, let's open this up again. Thing is, you fall below this Kijinsen, and now we may have a change of trend, and now we'll be looking for price to come back on the other side of this Kumo. Alright, but there hasn't been any signs of that. There's signs of this no momentum right here just with this. But see, that's because basically price retraced. So we want to see what's going to happen here. So we want to wait for price to break this level. If it doesn't break that level, then we wait for the Kumo breakout on the other side. Alright, so that's the euro dollar. I'm looking at the euro dollar as bullish and looking for it to run to those two areas that I told you. The Aussie dollar monthly time frame. This is another very nice one. But the thing is, we're not sure what it's going to do yet. Look at this level here. Okay, see back here where price came up. This level is a strong level. I could probably go way back and find where it hit off of that level a few times. But what we're going to do is look here. Price came up, hit that level, dropped way down here. Price came up, didn't want to attack it yet, then took a run at it and broke through. Alright, so it broke through. Now these are monthly candles, so look how strong this support is. Hit it one time, two times, 3 months, no break, comes back up, goes up, almost hit it here, came back down, hit it 2 more months, went back up, hit it 2 more months here, went up. Now to hit this month. Now we're going to see what's going to happen this month here where we are now. So it's looking like this is becoming weak, and this level is going to get broken because you got Chico span below the price, and Chico span is bouncing off of that level, and you have your TK crossovers here. It's a bearish crossover, and your cloud is right now, your cloud is very thick, a lot of volatility. Now the thing that I do see with this on the monthly time frame, and it's telling me that maybe we have some more downside, is this descending triangle pattern. Alright, you could see that because of these highs. When the market's making higher highs, I mean not higher highs, hold on, let me put this line here. This line basically will be right where the dash line is. But when the market is making lower highs but pretty much even lows, your lows aren't higher or lower, they're pretty much even, you start to have this descending triangle pattern. And so a lot of times when you get a descending triangle, what happens is, if you are in an uptrend, it's going to signify that you're going to have a reversal on the other side. So if you were on a downside, it's going to signify that maybe when you break out, it's going to be a reversal to the upside. Alright, so a lot of times the descending triangle pattern represents a change of your direction. So we were going up, now we got all this consolidation, now maybe we break low. So if we're going to break low, and see, the thing is, when Kijinsen and Kumo, when Kijinsen and Tenkan-sen cross like that, and then when they're angling down and angling hard, if they begin to start angling, I wouldn't think that price was going to break them. I would think price would break this level. It's showing you that the momentum is strong. I would think price was going to break that level. Now we don't have a very strong angle yet. Alright, so let's go to the daily. On the daily, oh man, it confuses me a little, because I see price sitting at this level, and then it makes me think that it's still going to continue up based off of the way we still have some very good slope on Tenkan-sen and Kijinsen. That shows you the momentum, but you could see where it died out, because you could see where we got fatter on the cloud. Alright, so your momentum is starting to slow down. We still saw a little bit of momentum to the downside with the Tenkinson, but Kijinson slowing down. So if that's flattening out, then maybe the market's not going to break that level yet. But that's a level we want to look for. We want to make sure. So what I would do is put my entry right down here. I want to break this level, close below this level here. So I would put an entry right there. Now that's the daily time frame. So let's see where that is. Let's make this our support and resistance line from the daily time frame. So that's your fractal support level. We want to break that level. Now you could wait. You could play this level and break that level. But let's go to the 4-hour time frame. But on the 4-hour, it's telling us that we're bullish. All right, pretty much. Only thing is, price is still inside the cloud, but it came out. So here's how we look at this. If price isn't, if it's going to reject this line here and not violate it, then what we're going to look for is for a close above this fractal level, because we have all bullish signs, right? So we have to play this as what we see on the 4-hour time frame. Now, so we're going to look for here. You got your TK crossover. Your Kumo twist is bearish. I mean bullish. Sorry, just turned bullish. And then Chiku span's above the price, and price is inside the cloud. So you want price to break outside of this level. And once it does that, then it'll be all bullish. But see, the thing with Chiku span, it's still underneath the cloud. We can take the trade, but we'll feel safer when it breaks outside of the cloud. So when it gets to this level, depending on how long it takes to break this level, then you might see some upside. Now the 4-hour time frame, I mean the monthly again, let's look at that monthly. If it's going to honor that level, it's going to move back up. You can see where it did it all these times here. Now if it's going to break that level, it'll fall. And we'll wait. If it's going to break that level, we'll wait for the break below this level here where we put that. So let's go back to that 4-hour time frame. That's off of the daily time frame. This is the daily time frame. And now, so basically, yeah, I'm not getting into a trade moving on to the 4-hour time frame. I move that fractal level down right to the 4-hour fractal. I'm not getting into anything short until we get that. All right, so I'm waiting till we get that level to go short based off of that monthly, and then long, we're just waiting to break this level. So here's our two levels to make a trade. Long at this level after the break and close, 96.44, and short on that level, 93.05, 93.505. So we want to break that fractal level, and then we could go. Now see, what will happen is we see what the market does. If it comes all the way down there, things may change by then. So immediately, short term, we're looking for the break of this level. All right, and then we'll start moving our stop loss, and we'll look to go to this level. All right, so break that level, look to go to that level short term, and then continue moving up. We'll go to the next level, and we'll just keep moving the market up with these levels. All right, so that's what we're looking at right now. So look for those levels before you take any trade. The short-term immediate trade is going to be the long trade, it looks like. But price is back inside the cloud. We want to see what it's going to do. If it comes outside of that cloud, your breakout won't give you. It all depends what happens with that breakout if it comes through that cloud, because still you might have Chiku span inside of the price realm. That's why I said the safer bet is down here. Now in the breakouts, you have to see where everything lines up. So that's Aussie dollar on the 4-hour time frame. Euro New Zealand dollar monthly, you could look at this monthly chart. Strong support and resistance levels. This is a strong support level, and this is a strong resistance level. This is your 4-hour, your monthly Kijinsen, and then this is your monthly fractal levels. You can see where that held twice, and then price bounced. Now we have a candle that's looks like it got pushed back down by the bears and made this nice long wick. So this level, it's got rejected off of the Kijinsen. Daily time frame, I don't know what to do based off of this daily right here. Okay, so because I see that long wick candle on the monthly, then I see a long wick candle on the daily, and then price dropped here. This would have been a very nice trade to get into going back to the 4-hour time frame. But now it looks like we may have bounced off of this level and attempting to break this level now. So let's go to the 4 hour time frame, see exactly what we're doing. Oh, hold on, let's go back to the daily. We didn't put everything in here that we need to know what's going on with the trade. If we get into a trade, we need to see this daily Kijinsen level, so we're going to put it in here. So now we see that, and we know that's a support level on the 4 hour time frame. So looking at the 4 hour time frame, well, man, there's some things on this chart. Basically, based off of the other charts and what this is showing me, we're starting to become bearish on this chart, bearish on the whole pair. So like I told you before, trends start from the bottom up. So what I'm looking at is for eventually a cloud breakout. But if price doesn't break out of the cloud until it gets here, I'm not taking the trade. I'm going to wait to see if I can get a bounce off of this level. So maybe price comes up a little and then comes out and then it comes back up. We want to see a bounce off of this level, this Kumo bottom here, and then break this level. So if price comes out of this cloud right down here, you want to make sure you break this level and close below this level, and you put a tight stop loss because you're going to be right on this daily Kijinsen. So we'll wait to see if it breaks, and if it breaks, then we could get into a short trade. If it bounces, we want to see if it could come back up and bounce off of the bottom of the cloud, and then take the bounce of the cloud. Okay, so if price comes all the way back up and bounces on this cloud, you want to definitely take that short, because now you have all this is free trade here. So you look for price to go to this level. Once price gets to this level, we'll look for it to break this level, and if it breaks that level, you move that stop loss all the way down here, all the way down to this daily Kijinsen. Now the thing that's going to happen, you see you got the TK crossover, you got the Kumo twist, bearish, all these bearish, Chiku span below price. Now price is inside the cloud, so we're in turbulence, we don't see anything yet. So we'll wait to see what's going to happen. Based off of what we see on this 4 hour time frame, it should be a bearish market next week, because we're going to probably be below the cloud based off of the way everything's lining up. But you never know what the market's going to do. But once we get outside the cloud, let's wait and be safe. Okay, get outside the cloud. If we get outside the cloud up here, that'll be different. We can probably take the trade, because then we have all this. But if you get outside the cloud close to this line here, to your daily Kijinsen, wait to see if it breaks that level. Don't get into a trade where there's not much room to run, because if you're up here and getting a trade, you have this room to run, and then you can hopefully get a nice long run. And then we'll start looking for our levels where we want to end up to. So let's go to the monthly real quick. Let's go to daily. So we break that level. Oh man, we just have to see. We'll take that by the 4 hour time frame and go by fractal levels. Alright, so we got the break here. We'll get the break. If we get the break, then we could look for these next levels, start looking for levels that we want to go to. So this would be our level, fractal level here. We move down a little more and just start moving down. Alright, and move your stop loss down as price moves down to these levels. Mark these levels. Once price gets to it, breaks this level, move your indication down to show you where your next support level is. Find that level and watch, see what price does there. Alright, that's how you just trade it. Let it move down, find out what it does there. Alright, that's the euro, New Zealand dollar, pound dollar, 4 hour monthly time frame. Pretty much in this triangle here. This is looking like you're at the Kijinsen right here. This is the monthly Kijinsen, that dash line. So let's go see what we got at the 4 hour time frame, at the daily time frame. Alright, on the daily, we're still pretty much bullish, but we're close to this level here. So when price gets to that level, we could expect maybe a pullback or a bounce off of that level and price to drop. Okay, because look at this move. This is a long move, then a low pullback, and it's still going. 50% retracement of this whole move is right here. So we're looking at price to get up here, bounce, and then drop, and we can take the bounce of this level here. But immediately we're still looking for a long trade. Now I'm probably confusing you guys because I'm saying we can play a bounce. I'm playing the bounce and getting you know, trading back against the trend. So I'm gonna be doing a counter trend trade on that time frame off of the daily. But I'm going to trade on the 4-hour time frame. So let's see what that 4-hour is showing. All right, now 4-hour is showing me that, yeah, that bounce could possibly happen, because basically I see the market dying, the momentum slowed down. You can see we're flatlining here. Both of these are flat. Price is barely above that. So the level that we're going to be looking for, you can see the volatility starting to develop. So you still have some upside maybe, but not much, pretty much none. So what we're looking for is price breaks this fractal level. I don't know if I'd even worried about that trade, getting into that trade. What I'm going to do is look for this level. When price gets here, maybe I can play the bounce. But then if price breaks that level, closes above that level, maybe we're going to continue with more upside. All right, so pretty much want to wait and see on this because we're too close to that level. I mean, you can trade the break of this fractal level. If you traded the bounce right here, you'd have been good, but price is moving up. So if price comes back down and bounces off of there, maybe you trade it. But if price starts to come back down, we may be starting to get into a range, and then we start to drop. We may never hit this level. All right, so just wait to see what happens here. The volatility died here, is large here, but the momentum died on this. So if the momentum dies and this market starts to fall downwards, then we'll look for a close on the other side of the cloud. Then we can start looking for shorts. All right, that's pretty much the pound dollar. We're looking at the dollar yen. The yen's been very good to me this past week. Made some very nice trades. So on the monthly time frame, you can see what I have here. I have the 50% retracement level at the Kijinsen. So that's the monthly Kijinsen, and then this is your top right here where you got the top of the cloud, monthly cloud. So you know those levels when you see them on the 4-hour time frame. So let's go to the daily and see that long wick candle on the monthly right there. We missed, but that means something. But that's past. So the market's doing what we thought it would do from that, because you see that long wick there. The market got pushed down and the candle closed. So here, yeah, we expected the market to to drop here, because we were at this cloud level. The cloud level is going to be strong support or resistance. So in this case, it was a resistance level. You could see where the market got pushed down, held resistance. Now the market's dropping. We expected that drop because based off of everything we saw, the candle and the support, the resistance. Now we're looking for here. This is the level we're looking for the market to drop to. Now we're probably about the 38.2 already. So let's go to the daily time frame. Now see, the trend started already on the daily time frame for the downside. So we had to break out, and then price is continuing downwards. Everything is bearish on this daily time frame. Chiku span is below price, price is below the cloud, TK crossover over here, and Kumo twist here. Alright, so everything is bearish here, looking to get short and ride that market to this level. This is going to be your target level. So let's go to the 4-hour time frame. How do we get into that market? Basically, a couple ways we could get into that market. Alright, so we bounced off of that level here. There it was right there. This is that monthly Kijinsen. This is the monthly Kumo cloud right here. Let's see, the monthly Kijinsen will be way down here. That's going to be our target level on the 4-hour time frame. That's where we're shooting to get down to, and that's way down here. Alright, so what you want to see is a break of this fractal level and ride that market to there. Now on the 4-hour, everything is bearish. You got your TK crossovers. You got another strong one right there. Let's see, get this better so you guys could see it. You got that strong crossover, and there goes price dropping. Chiku spans below price, price is below the cloud, and your Kumo. See a little bit of volatility there. That's based off of this consolidation right here. Now what we want to do is look for a trade below this fractal level here. Now we're already below that level basically with this last candle closing, but it's Friday at the end of the day. So I'd love to see price retrace and move back up, get up to the Kijinsen. So what you're going to look for on the 4-hour time frame, we know we want to be going short. All the other things are telling us that we would love to see the price come up closer to this level because we don't want to be that far from the Kijinsen on the 4-hour time frame. Let's see how far it is exactly. Alright, so from here 237, yeah, that's getting up there for the 4-hour time frame. So we'd love to see that retrace near that level and then take this short, play that off of a Kijinsen bounce. Now if we can't get that, we're going to wait for the break of this level, and being that we're so far from the Kijinsen, I may wait for a retrace and then break. So we're out of equilibrium when we're that far away from the Kijinsen. Alright, but still you want to be looking for to get in a short opportunity to ride the market to that level that I showed you, down to the monthly Kijinsen. This is the New Zealand dollar yen on the monthly time frame, last pair that we're going to be looking at here. Alright, so I'm taking up a lot of your time, but I'm getting done almost. You can see we had the price break out of the cloud, and when it broke the cloud it never came back, and it didn't retrace all the way back yet. But see, a lot of times I tell you, you get that break but price will retrace. Now this is the monthly time frame, so it takes a while here. So it's now retracing, and we would love to see it retrace back to the 50% retracement level, which would put us right here with the pretty much close to the cloud, but right at this monthly Kijinsen. Now this is 38.2 retracement level right here where we are right now, so price may not drop any lower. So let's look at that. Now what I'm going to do is I want to see that level for one reason. That's going to be the monthly Kijinsen, the monthly Tenkan-sen. Alright, let's make it so we know what it is. And the way I make it a monthly is I put the dash lines. The dash line tells me it's monthly, and the color tells me that it's Tenkan-sen, because I have my colors Tenkan-sen, Kijinsen, the cloud color. Alright, so let's see what that's doing on the daily time frame. This is on the daily time frame we're bearish, on the monthly we're bullish. Alright, so on this daily time frame you want to get below this level where we put that where we put the Tenkan-sen level. So that's 75. You want to get it below that 75 target right there. That's a psychological support and resistance. So you may see the market bounce off of that level, then pull back up and get closer to the Tenkan-sen here. To the Kijinsen right here. And once you see that, then you still want to ride this short and take it to that level that we showed you. Alright, so get to the 4-hour time frame. Let's go back to the daily. Need to put this line in here. I didn't put this. This is my daily Kijinsen. Make it the color that it needs to be. And a solid line lets me know that this is the daily time frame. The daily time frame will be solid, and the color, like I said. So let's see where that lines up. Let's go to the 4-hour time frame. Pretty much, we don't want to see anything going on with this pair except a break below this level. Now, let's go back to the monthly. Show you one thing. Alright, on the monthly we may be done with this move, right? If we're done with this retrace, because ultimately it looks like the trend is upwards, but then we had a retrace here. We may be done right here, 38.2 right here. So if we're done and you're getting a bounce here, so the daily bounce right there at the Tenkan-sen, the monthly Tenkan-sen. So if we're done, right, pretty much done, then what's going to happen is we're not going to violate this level. This level is going to be observed and price is going to move up. We'll be at the daily Kijinsen, we'll get a breakout. That's when we will play our trade the other way. So right now we want to look for the break of this level, but if and then write it down to that level that I showed you on the monthly, which is right there. But see, we're not that far away, so price may not drop any farther. So we want to be observant of these levels here. So watch that 75 level, and then if it does drop, you got a good almost 500 pips in you, 400 and something pips if it drops down to this level. And then if not, what's going to happen, it'll break the cloud. Then you got to observe this level. This is going to be your daily Kijinsen, and then you want to break out of this level. That's my daily cloud, right? Let's see that. That's the daily cloud level. This cloud level right here, from that flat back there. And it got observed. You see where you had that breakout here, and then look what price did, retrace back to that level. That's why I tell you, don't worry about missing breakouts. They retrace pretty close back to those levels. Alright, but that's it, traders. I think I'm wasting a lot of your time now. Almost done here. 4-hour time frame. Again, just look, remember, I got my level here. I want to break that level. That's my daily, that's my monthly Tenkan-sen. If I break that level, I can take that short. That Tenkan-sen is also in line with that 4-hour fractal level. So break of that level, and we take that short for another 400 pips to that monthly Kijinsen level. If that doesn't work out and it doesn't happen, you wait for the break of the cloud, but be aware of these levels here. And with a really strong run, if we do break the upside, once we break these two levels, we have a lot of upside left. And ultimately, this was a long-term, ultimately this is going to be a long-term, long-running trade. All right, because all I can see and what I think is going to happen, the way I would see the market doing, is retracing. You're retracing right now, and either retrace to this level where it is, or bounce off of this level and then go up again for a nice run. So that's what I'm looking at. All right, traders. Hopefully you understood what I'm telling you. Hopefully I'm not confusing you, and hopefully you're gaining something out of this, and you can start doing this yourself. But remember, that trade that I really love is that Euro Yen. Look at that Euro Yen. Do some analysis on it. Do the things that I've been doing, because this is the one that I really love. Look at it on the daily time frame, and you can see it's set up for the breakout. Sometimes things don't happen like you want, but that's the one that I'm really leaning on this week. All right, traders, so do some analysis on it and then see where you might enter, if you're going to enter. Keep your tight stop. Keep your stops tight, and don't make large stop losses where you're going to only be able to trade a couple times and then you lose your account. All right, you want to be 50-50, so you got to do your analysis, and if you're right half the time, you'll be all right. If you just bat 50%, you'll be all right. You could even be all right with 40% if you keep your stop losses tight. But if you have large stop losses, you better be batting 80%. All right, so that's just where we are, traders. Hopefully I'm helping somebody. Until next time, hopefully God is blessing you, as I know He is. Hopefully things are turning out the way you'd like them to with your trading. And traders, till next time, God bless. So long.